Hello everyone, welcome to today's session. So today I'm going to start with a chapter which is chapter number 8. Before I proceed and before we go and discuss this particular chapter, anyone has any doubt from previous chapter on or from previous topics? Any doubt anyone has? No? Okay, not an issue. So if you have a doubt at any point in time, then I recommend to ask immediately. Okay. So let us now begin our chapter number 8, which is specialized area. Now, when I talk about specialized area, when I discuss about specialized area, it is basically the SA 800 series that we are going to discuss in detail. And when I say SA 800 series, we need to understand why it was required. Okay, because till the time you don't understand that why, you will be not be able to understand about the particular topic. Okay, so first of all, uh, this particular whole entire chapter, okay, you are required to have a basic understanding of SA 800 series, how is SA 800 series works upon, okay, what are the things, which are the topics covered, okay, when it is required to be used, what is the purpose of SA 800 series, okay, and basically it covers three different essays. So if I talk about it, covers three different essays, which is essay 800 itself, which is the special consideration, okay, special consideration for auditing a financial statement, like special consideration for audit of FS. Now, this FS is prepared in accordance with the special purpose framework. So, audit of FS prepared as per special purpose framework. That is SA 800. When I talk about 810, again, this is special consideration that we need to provide, okay, for the audit of single FS, audit of single FS, or specific element, okay, of a particular financial item, like financial statement, okay, so that specific element or specific item or specific account, if you are auditing that one single FS, one single element, one single account, one single item, SA 810 will come into SA 805 will come into the picture. My mistake, not 10, 5. Then comes SA 810. Now, SA 810, it's the engagement on report on summary financial statement. So, if there is an engagement wherein you have to issue a report on summary FS, at that point in time, SA 810 comes into the picture. Okay. Now, this is what we are going to discuss throughout this entire session or entire series. Okay. 800, 805, and 810. Pretty much easy. I have prepared a chart for you guys so that this chart will help you to understand all these essays in a very appropriate way. You could have a good understanding with the help of these charts. Okay. Now, let's talk about first SA 800. Okay. The very important one, like for this particular part, because here we need to understand a key term, very important term. That is your special purpose financial statement. Now we need to understand when we are going for the audit of financial statement which are prepared as per the special purpose framework. That is something we need to understand. What is this special purpose framework? Can anyone tell me what is this special purpose framework that we are talking about in SA 800? So when I go for SA 800, I'm talking about special purpose framework. This is the one that we will understand first. Can anyone tell me what is special purpose framework? Anyone? What is special purpose framework?
Financial information for specific particular persons or a purpose.
Okay. Okay. Good. Anyone else?
It is prepared framework designed to meet the needs, special needs of a specific group of users rather than a broad and general group of users.
Okay. Yes.
For example, for creditors,
Hmm.
debtors,
Hmm.
or for regulatory authorities, SEBI,
Hmm. Okay. Yes. Very good.
bank.
Absolutely correct. Yes. So,
It
very
is contractual. Basically, it is contractual.
yes. Absolutely. Yes. Good. So, when I talk about special purpose framework, SA 800 defines this special purpose framework is a framework which is designed to meet the need of specific users. Now we need to understand why and where it is required. See, if you want to understand special purpose framework, you need to understand where it is used, where it is required. So can anyone give me an example where you prepare financial statement as per the special purpose? Like we do not, we are preparing financial statement to meet the needs of these specific users. One such example you gave me was bank. Very good example. Tell me which are the other examples. Okay, so tell me which are the other examples you think is on special purpose framework. One was bank. Which is other? Which is the other one? No. Okay. So if I have to give examples, let's say
Creditors, sir?
no
Creditors?
creditors, but do you prepare a special set of financial statement for
No,
credit?
no, 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 sir. No.
So, for example, you are preparing financial statement for the purpose of, let's say, group reporting. Something you are reporting at a group level or to some other entity outside India. Or let's say, for example, you are preparing financial statement to comply with a contractual requirement. So these contractual requirements are kind of requirements enumerated in the shareholders agreement. So let's say you are getting funding from outside India from a particular entity. That entity will put a requirement that I need a financial statement on this basis. This is what you need to consider as the operations. This is what you need to consider other income. This is the only thing which should be parked or reported in the income section. Rest all should be classified differently. So they give you their own set of recording, like recording rules for the transactions. So when you take investment, they are more concerned with some special kind of transaction, some special kind of reporting, and they may ask you some special kind of financial statement. For example, cash basis. A lot of investors requires you to prepare the cash basis financial statement to understand what is actually happening with the cash that they have provided to you. So in that case, when I talk about those cash basis, contractual basis, that is the special purpose framework because it is designed to meet the needs of that particular specific user. Okay, so here when I talk about the specific users, you may write or you may refer this as an investors. Or when I talk about designed to meet their need, designed to meet the need, you can say that okay, cash basis of financial statement for funding, cash basis of FS required to validate funding. Okay, so this is the need, and to meet the need, they will give you a special purpose framework. Now, again, examples are given. For example, cash basis, as I said, okay, cash flow information or something like that, financial reporting provisions of a contract, again, any specific to meet the regulators' requirement. So all these are special purpose framework. Now, when I talk about special purpose framework, it is different than the general purpose framework. Always understand, general purpose framework is the financial reporting framework that we have talked about, we have discussed about till now from SA 200 to 700 series, whatever we have discussed. It was general purpose framework, which is for the common people, for the common informational need. You don't prepare separate financial statement based on the need of the stakeholders. You give a common financial statement to each and every stakeholder. Do you provide separate financial statement to bank, to income tax authorities, to MCA, different version? Answer is no. We have a common financial statement, we give everyone that. So that is your general purpose framework. And when I talk about special purpose framework, it is for the special needs, special users, or special stakeholders which are there. Now, throughout this particular standard, SA 800, whenever I say financial statements, we will assume a complete set of special purpose financial statements. Reason because when I will go to SA 805, I will talk about single FS, single financial statement. That over there, it will not be a complete set of financial statements. But here, when I refer to financial statement, it is the complete set of special purpose financial statement, not the general purpose. Because general purpose already we have discussed from 200 to 700. Clear? So whenever I will use the term financial statement, you need to assume a complete set which is made as per the special purpose framework. So financial statements prepared as per special purpose framework will be called special purpose financial statements. Okay? Clear? Any doubt till now?
Clear, sir.
Very good. Now, if you understood this, if you know audit that we have understood till now from SA 200 to 700 series, half of the SA 800 is already done, or more than half, I would say. Why? Can anyone tell me, like, why I'm saying more than 50%, let's say 70-80% already SA 800 done, finished. You already understood the SA. Why it is so?
Because the standards applicable over there are applicable over here.
Absolutely correct. Yes, we are not learning something new in case of audit. See, that's why I say it is a special consideration. That means you need to focus something different. You need to provide some special considerations. But at the end, the underlying thing is audit. And audit you have already understood with the SA 200 to 700. Already done. We have understood the audit. But now we need to just understand how to apply these standards in case of this special scenario. That's it. That's the portion we only need to understand over here, because it is a special purpose framework. So how to apply the concept we already know for the special purpose framework. There is nothing difficult over here. Trust me. It is pretty much straightforward. The concept we have learned till now, we will be discussing those concepts same, just with a different way of application. Okay? Okay. So now, when you start a particular audit, what is the first thing you perform? Like when someone approaches you, okay, will you be my auditor for the this financial year? What do you say? What is your first thing?
We'll have an agreement.
Yes, you have the agreement. Okay. Then what is the next step?
Independence.
Independence. Yes, absolutely correct. So we will talk about independence. Yes. What else? What else you will do? Independence, acceptance agreement.
Under- Understand the entity.
Yes, understanding the entity. Very good. And then we will plan and perform. Yes or no? Audit. Once you'll understand the entity, you will plan the audit, you will perform the audit, and at the end, what you will do? You will form an opinion. That's what we do in the audit. Yes or no? We are going to do that only. We will first decide whether to accept the engagement. We will plan the audit, we will perform the audit, and then at the end, we will form an opinion. That's the requirement of SA 800. Okay. Now, having said that, we need to understand over here, okay, what is the objective of the auditor? Here, the objective of the auditor is with respect to these areas only, that you need to apply special consideration to these areas. Okay, focus differently to these areas. Now, for example, when it comes to the accepting such engagement, what was the usual requirement? When, let's say, for example, if it is a normal audit, what is the requirement to accept the engagement? What usually you do to accept the engagement? What things you check to accept the engagement? Anyone?
Integrity of the client,
Integrity of the client, yes.
capabilities to perform the audit, resources, time.
Absolutely correct. Yes, very good. There is something different, not different, rather, there is something additional that we have to do mandatorily when we are accepting or before accepting the assignment.
Ethical requirements, laws and
Ethical requirements, yes, very good.
laws and regulations.
Laws and regulations. But there is something called a very important part. Like there is something very important part that comes, before all these things. Do you remember something called preconditions of an audit? Yes, no? Preconditions for an audit. Let me take you back. This is SA 210, bare text in front of you. There is something called preconditions of the audit. What is the precondition? What is the first precondition? Determine whether the financial reporting framework to be applied is acceptable. The first and foremost thing under the head of requirements in SA 210. This is SA 210 I'm talking about. Agreeing the terms of an audit engagement. The first and the foremost thing that it says that determine whether the financial reporting framework to be applied is acceptable. Okay, now the question comes is, how will you apply this in SA 800? If I talk about special consideration, how will you determine this is acceptable?
By the agreement.
Absolutely correct. By the agreement or the basis, whatever is there. So, for example, the basis is, let's say, contractual basis. Now, the contractual basis, you need to understand whether that is acceptable, whether the what is written in that contract. So, for the purpose of special consideration, you need to understand sorry, the special purpose framework. Okay, which will be the financial reporting framework in that particular case is acceptable. You need to understand from the document. You need to understand why we are choosing cash basis. Let's say tomorrow the contract says that no, you have to prepare as per the accrual basis, and management asks you to prepare on management prepares on the cash basis. Will you accept that? Will you accept that particular part?
No.
But a lot of students might have a question, sir, any which ways, it's a special purpose. It is not the general purpose. Now, why we are checking this? Whatever management prepares, whatever management decides, let them prepare. We will audit that. Then why we are bothering to, whether it is acceptable or not? What is the reason why we are checking this? That whether it is acceptable or not in case of special purpose. Any which ways, it's a special purpose. Whether it's a cash basis or whatever basis management wants to prepare, let them prepare. What difference it will make? Anyone? A lot of students have this question, sir. Any which ways, this is a special purpose. Why we are bothering ourselves with the framework? Whatever they want to prepare, let them prepare. Why we have to bother ourselves? Anyone? No? Are you getting my question? Like what my question is basically, why we are checking whether it is acceptable or not? See, it is written in SA 210, fine. But for the special purpose framework, do you really think it is relevant? Or just because I'm saying it is relevant?
No, it is relevant, sir.
But why? Why we have to check that? What is the logic behind it?
So reporting.
Absolutely correct. So, unless and until you don't determine how it is going to impact, or what financial reporting framework is, how will you write a report? Whether your financial statement is meeting the requirement given in the contract, or whether your financial statements are meeting the requirements as given in the cash basis. In the opinion, you have to write, okay, this is the basis of the financial statement, whether it is meeting or not. A simple example, I will show you something on. These are the documents. Again, it is nearest example. I will not say the exact example, but something nearest. Okay. This is the document, again, publicly available document. There is something called prospectus. I'm not sure how many of you have seen, but this is the prospectus, final one. Now, in this prospectus, we have something called financial statements. Financial statements. Yeah, restated financial statement, page 269. Okay, I have to go manually. Not an issue. 269. This is financial statements. Dividend policy. Okay. Just, yeah, here it is. Again, this is the audit report. Okay. Independent auditors examination report. I'm just showing you for the example purpose. It is the nearest example I could, have for you guys to understand how it works. See, whenever we are writing a particular, like report, whether it's a special purpose or we will see very different examples. But in those cases, what we do is we specify that what is the subject matter against which we are evaluating the financial statements. Okay. For example, in this particular case, we are saying that the restated financial information prepared by the management of the company in connection with the proposed IPO of equity shares of the company in accordance with the requirement of Section 26 of Part 1 of Chapter 3 of Companies Act. Then paragraph A of clause 11 of Part A of Schedule 6 of SEBI ICDR regulations, guidance note on company prospectus, okay, and all other things which are there. So this is something, a basis of the financial statement, how the financial statement are prepared. Now this, in this particular scenario, till the time I am not, sure whether this is acceptable or not, how can I write this audit report? So for this purpose, when I will write the audit report, I need to specify whether they meet the requirement or not. For that, I need to understand what is this special purpose framework, whether this is acceptable. Then only I will be able to, do the audit and give an opinion. Clear? Any doubt? Any doubt? See, somewhere these are some kind of reports where you will also get these lines. For example, you may say this is a special purpose, but there are other cases also. Our examination of the restated financial information has not been carried out in accordance with the auditing standards generally acceptable in US or standards of PCOB. Okay. And accordingly should not be relied upon anyone. If it was conducted as per the US standards or for PCOB, we could have said, yeah, it's a general purpose because it's for the specific set, different standard. So yeah, one of such example, if you find a report or as per the US gaps or for the PCOB standards, you may call it special purpose also. So this is how it is important that we need to understand what financial reporting framework it is applicable. And accordingly, we need to modify SA 210 and we need to apply. So we need to understand few things with respect to that. That what is the purpose? Why we are preparing this? Who has asked us to purpose? Like who has asked management to prepare these financial statements? What is the purpose preparing behind them? Who are the intended users? Who is going to read this? Whether the applicable financial reporting framework in these circumstances is acceptable and determined by the management. So this particular acceptable financial reporting framework, or you can say special purpose framework, is acceptable. And what steps management has taken to determine this? How they have determined? No, it should be cash basis. It should not be, something, okay, sudden I am getting, it should be cash basis. There should be some basis on that. So that is the first thing you need to do for the acceptability of the financial reporting framework. Okay, purpose, user, and applicable financial reporting framework, PUA. So to determine, the first step is understand PUA. Okay. Then when you are doing planning and performing the audit, what you will do? What special consideration you will put into this? So if you are planning or performing the audit, what special consideration you will put into this? Anyone? Can anyone tell me a specific area where you think, no, we need to focus a bit different apart from whatever we have discussed till now? SA 210. Which is the area where you think, no, we have to focus something different, something, bit, it will be performed in a different way compared to my normal audit and normal financial statement or general purpose financial statement.
It's material matters.
Sorry?
So material matters. Material.
Materiality. Yes, absolutely correct. Materiality. Very good.
No, materiality may be different. That is the thing.
Correct.
Than
Yes.
than the usual.
Absolutely correct. Yes.
Materiality is there over there also in general and over here also, but the level is maybe different.
Absolutely.
It may
Very
be
good.
on a lower level. So more checks would be required, more procedures would be required, since if it is at the lower level.
Correct. One important area is the materiality. Now, why materiality I'm talking about, or why materiality reason? Because, see, in general purpose financial statements, you determine materiality benchmark first. Okay, profit, sales. Why benchmark? We determine what is material for the users at the large. So users at the large might be required to look into profit. They might look into, let's say, sales, turnover. These are the common numbers that they are interested into. But special purpose framework will change the definition of material. Can anyone tell me what was the definition of material? What is material? What is material? What is the definition of materiality? Anyone? What is materiality? What is material? When I ask you, let's say, what is the definition of material?
It's quantitative details which affects statements, financial statements.
Okay. Yes, Manish, very good. What is material? When I'm deciding it is material, it is immaterial. How? Like materiality level is fine. But what is the base of that? What is the definition of material? The term material. Can I say material means anything which can influence the decision making of the user or the reader? If a particular item can influence the decision making of the reader, then can I say it is material? So, on particular that line, if the item or if a particular financial statement line item or account is misstated and it can influence, if I show in a way, in a misstated way, and it can influence the decision making of the reader, that is material. For example, profit. If I show profit higher from a number, let's say a balance sheet of crores, I'm showing profit 100 rupees more, will not affect the decision making. But a balance sheet of 100 crores, I'm showing profit, higher side in crores. It will impact the decision making of the user. So that's the basis of materiality. Now, when I talk about the understanding of the users, okay, or if I talk about decision making of the user or the reader, here the reader or the user or whosoever you say, stakeholder, that are the specific one. Remember, specific users are there here. So we need to understand for these specific users what is material, whether profit is material, whether sales is appropriate benchmark, whether profit is appropriate benchmark. So what appropriate benchmark do we have? For example, cash basis of accounting. Do you think for them, let's say if the special purpose framework is cash basis, do you think the accrual base of profit is material for them or relevant for them?
No.
Absolutely, yes. Correct. So for them, it might be the cash profit. For them, it might be the cash inflow or outflow from the operating activity. So accordingly, your materiality benchmark will change, your materiality percentages will change, and your materiality amount will change. Although the underlying financial statements, underlying accounting data is same, which was there in the general purpose, which is there now, but your materiality will change accordingly. Clear?
Yes, sir.
Yeah. So in that case, all the essays as we have discussed will be applicable. Relevant ethical requirements, all the relevant essays, they will be applicable. Auditor has to comply with them because at the end it is your audit only. But there are certain things we need to apply differently. For example, materiality. What else you will apply differently? Except for materiality, what else you will look into differently? Anyone? What else you will look into differently other than materiality? Anyone? Okay. In normal audit, you do after accepting the engagement, what you do? In normal audit, after accepting the engagement, what is your first step?
Obtain understanding of the entity.
Yes, obtaining understanding. Do you think it will go undergo a change? Do you think it will undergo a change? Or do you think you will apply that particular asset differently?
Yes, sir.
What different you will apply then? Like
Here
the way we yeah.
special means consideration is there. So special users point of view, we have to do this.
Okay, good. Yes. Anyone else to add? Anyone else would like to add to this? What more different we will do? Anything? Anyone? No? See, when I talk about, let's say, for example, special purpose framework, when I talk about, let's say, contract. So you are required to prepare financial statement as per the contract. Now, you need to understand that contract. You need to understand that transaction. You need to understand the requirement of that contract to in order to understand how the entity should prepare the financial statement. So, understanding of the applicable accounting policies, understanding the terms and conditions of the contract, understanding how this financial reporting framework is different than the general purpose is something you need to add into SA 315. So SA 315 will now also look onto the application of accounting policies differently. understanding of any significant interpretations of the contract. Let's say if you are preparing under the contract, okay, any material difference which is there compared to the general purpose, you need to understand that. SA 320, we understood materiality. Similarly, we need to apply SA 620 or 260. What is 260? Just now, Manish, you told me. What is SA 260?
Communication with those charged with governance.
Yes, absolutely. What it will go, why it will change?
Because TCWG might be different.
Yes. So, no, please go ahead, Prashant.
No, sir. What I mean is that in here there might be a difference in the TCWGs.
Yes. Okay. Okay, Manish. Yes. See, there could be one scenario, let's say, for example, till now, the overall preparation responsibility of preparing the financial statement was of management. And TCWG was those charged with governance who are responsible to oversee that. Okay. But in this scenario, we need to understand, are they required to oversee the preparation and the presentation of financial statement? Number two, as per SA 260, we were communicating the planned approach of the audit, significant matters, significant difficulties, anything which can modify our opinion. All these things, again, you will now need to discuss from the new special purpose framework point of view. So those communication will change. That communication will happen with the, those charged with governance. It may happen that for the purpose of general purpose financial statement, those charged with governance was your audit committee. Now, for this particular purpose, it may be a smaller section of the audit committee, or it may be a different committee altogether, who is being, assigned the task to review these financial statements, or oversight of these financial statements. So accordingly, you need to understand, okay, who are those charged with governance in this scenario? What matters you need to communicate? What are the important things that you were communicating earlier now, whether they are required to be communicated specifically or not, whether they will be forming part of your communications or not. So you need to apply SA 260 now accordingly. Any doubt till now? Any doubt? Okay. Now we will look into a very important part, which is your reporting. Okay. Because rest everything will go on accordingly. Let's say, for example, auditing procedures, assessed response, audit evidence, confirmations, and everything, whatever you have understood, may be applied to that particular modified extent, as may be applicable in the scenario. So that will totally depend upon the special purpose framework. But now we need to understand what is the requirement for the reporting. Here, now we will look into the requirement for the preparing the report for this particular kind of engagement. See, in this scenario, SA 700 will be applicable. It is not like that the SA 700 series is not applicable. SA 700 will be applicable, forming an opinion. You have to apply that for sure. But again, we need to modify that a bit to this particular extent, or to apply in this scenario. So tell me, how will you modify that? What you will do to modify that?
We will specify that these are special purpose financial statements,
Yes.
and our audit report is meant for this purpose.
Yes, absolutely. Very good. What else?
There was one more thing, so I don't remember that. There was one more thing which we have to do.
Okay. Anyone else would like to add to this? Hetal, anything? What do you think could be, something different we can add over here? Like what special consideration we need to focus upon? Okay. So if I have to tell you this uh, special consideration in this particular scenario, okay, the first thing we need to understand is the reporting point of view that, okay, till now we were mentioning general purpose financial statement, but now we need to mention, special purpose financial statement. We need to alert the readers, okay, readers, this is the special purpose financial statement. Then we need to provide some minimum things in our report. You can say these are some things which are required to be included, specific considerations. Number one, okay, you need to specify the special purpose framework. Fine. Then you need to specify if management had a choice of selection between different financial, reporting frameworks. Let's say contract provided, 2 to 3 different options. Then which option management selected? Why they selected that option? The report should describe who are the intended users. Okay, remember, what is the purpose of this? Who are the intended users? What is the applicable financial reporting framework in this scenario? PUA. Okay. And when you are communicating, let's say, key audit matters, okay, then you need to apply SS 701 in entirety. That means you cannot leave a particular standard, okay, I will apply SS 701 to this extent only. No, you cannot do that. If you are applying SS 701, you need to apply fully. You cannot apply partially SS 701. Are you getting the point? Then if you are applying SS 720, okay, if there is any other information which is given, then in that case you need to specify which is that other information. Is it something similar which was given with respect to your general purpose financial statements? So all those things you need to understand in this particular scenario. Okay. Then again, if there is a other matter paragraph, if there is EOM or OM paragraph, you need to understand whether it is necessary to provide and it will be appropriate to provide. If you think it is appropriate to provide, then include, but by complying the standard fully. You should not be doing that. You should be complying standard partially. But you need to determine whether it is applicable or not. Clear? Then we need to understand with respect to some specific paragraphs which are there in audit report. For example, going concern paragraph. Are you required to report on the going concern in case of special purpose framework? What do you think? Are you required to report?
So 570 will be applicable.
Depends upon. That totally depends upon the financial reporting framework. Let's say, for example, if you are preparing the financial statement on the cash basis, on the realizable basis, then it doesn't make any difference whether your going concern is there or not. Are you using the going concern assumption in your financial reporting framework? Whether your financial reporting framework takes the support of going concern assumption for the accounting. So over there, or is there any specific requirement to report on the going concern assumption, going concern, material uncertainty, significant events? So whatever your requirement of financial reporting framework is there, you need to understand that. And accordingly, you need to see whether you are required to report or not. And the last part is, you can say either restriction or, alertness that you need to create. So for example, when there is a special purpose framework, you need to alert the readers that this is special purpose framework. This is not the general purpose. So you need to alert the readers by having a separate paragraph on this. Okay, in addition to the other requirements which are already we have discussed, alert the readers this is a special purpose framework by including an either emphasis of meta paragraph. If it, always management will provide this is special purpose in their financial statement. So that's why it will be an emphasis of meta paragraph. Okay, so provide an EOM paragraph and alert the readers. And then distribution, restriction or distribution, that it should not be used for the purpose other than whatever, for which you are creating it. So there should be a restriction on distribution or use of this particular report. Clear? Any doubt? Any doubt till now?
Yes, sir. So, if in general purpose framework, auditor has not mentioned about this going concern, and in special purpose, if auditor find that there is some misstatements, going concern is there, what he will do?
See, now there are two things in this particular scenario. It could happen that the special purpose framework may require you to report some small matters also, which might not be significant from the general purpose framework's point of view. So you need to understand whether it was material from the general purpose framework points of view also, or it was not. Because let's say, for example, SA 570. Okay. So there are events and conditions which were creating significant doubt on entity's ability to continue as a going concern. Now, it is a significant. Okay. There was a material uncertainty. It was a significant. Am I required to report as per the general purpose framework? Answer is yes. Have I reported it? If no, then there is a problem. Okay. When I was required to report, and if I have not reported, then it's a problem for me because I missed something. I could be held and based on the professional misconduct. It could be a gross negligence, fail to report second schedule. Okay, part 1, I think clause 567 will be applicable. But if it was not required, if it was not significant, let's say it was not material uncertainty, there were events and conditions, but they were not casting significant doubt, and the special purpose framework requires you to report even small immaterial events and conditions, then fine, let it be. The two reports will have one will have this paragraph, another will not have the paragraph. I hope I'm clear.
Yes, sir. Yes, sir. Thank you.
Any other doubt?
So in the example just taken, and then if it is a then the in the case if it is this case is there, then the auditor will first see whether the will try to correct the report paid earlier in which this was not done. So he will try to discuss with the management whether the financial statements can be amended. All those things will be said in the answers if it is there, because we will try to correct it in the at that level, in the first report level.
Yes, yes.
Correct.
So, like if let's say sometimes modification of the audit report is not permissible. The report is submitted to different people, stakeholders, published in the market, everywhere. It becomes very difficult at that point in time to again then modify or issue a new audit report, or sometimes even it is not permissible. So you need to understand at that point in time what legal remedy you have. It is not a clear cut answer. I will say you will try to modify, because modifying the audit report, it's quite a difficult task, given it is already issued, it's available in the masses, and it may be let's say submitted to the regulators, income tax department, a lot of people. So you need to understand what legal remedy you have now for that.
Yes, sir. Thank you.
Any doubt?
No, sir. Thank you.
Yeah. Okay, if no further doubts, can we take up some questions on this topic so that we can understand about this topic further? Let us take some questions. Let me share. So here is the question. Let us read the question.
Sharp and Associates, Chartered Accountants.
Otherwise, you want to get the sound. Okay, let me see.
Sharp and Associates, Chartered Accountants, are the auditors of Riverfront Developers JV, a joint venture set up by two large listed entities, Alpha Limited and Beta Limited, for a specific metro rail project. The JV agreement, which governs the operations of the JV, stipulates that the annual financial statements of the JV are to be prepared on a cash receipts and disbursements basis to determine the profit distributions to the venture partners. For the year ended 31st March 2025, the management of the JV prepares the financial statements on this basis. However, the statements are titled Balance Sheet and Statement of Profit and Loss, and the notes to the financial statements do not describe the basis of accounting as a special purpose framework. The management also informs you that they plan to submit these financial statements to a bank to secure a new credit facility. As the engagement partner for the audit, advise your audit team on the key reporting responsibilities in accordance with SA 800. Specifically, discuss the requirements regarding the auditor's opinion and the specific paragraphs that must be included in the auditor's report to address this situation.
So take a minute, read the question again, and then try to answer what you will write in the answer. Okay, take a minute and read the question again. Okay, so this is the question. Now tell me what you will write in the answer. What you will write. Anyone?
So in the EOM paragraph, he will give the opinion that these were the special purpose financial statements and they were intended to be used for the purpose of bank credit facility.
Okay.
And he will also specify the different framework in which the financial statements were prepared by the management.
Okay. Good. What else? Anything else do you think that
So,
should be reported here in
alert
your
the
opinion?
readers. Yes, sir. They have to alert the readers that it is not suitable for mass reading.
Yes, absolutely correct. Very good. You have to alert the readers. uh, can you explain, Manish, like your query again or the question again a bit? Okay. So let's understand what we will write in this particular part. Very good, Hetal. Yes. So here, how to write the answer, we will also discuss that. Now, let's say, for example, this particular question is there. Okay, this particular question is there. Now, what is asked? First, understand what is asked in the question. Advise your audit team on the key reporting responsibilities in accordance with the SA 800 and specifically discuss the requirement regarding auditor's opinion on the specific paragraphs. So first of all, we will code the SA 800. When we will write the answer, we specify what SA 800 requires. Okay, again, I have tried to prepare a suggested answer for you guys. Kind of which is like, again, it is not the only way to write an answer, but yes, there are, this is one of the way you can write the answer. Okay. So when I talk about the answer, basically, first of all, specify this is as per the SA 800. Okay. Now, SA 800 requires you to do this, or you need to specify the scenario as per the SA 800. Okay. Uh, Over here, like specify what is the provision of SA 800. Start with the provision. What SA 800 says. Okay. What are the requirements under SA 800? Like you are required to describe purpose of the financial statement. Okay. You are required to write about whether it's an applicable special purpose framework. Remember purpose, user, and PUA. Remember we were discussing about that. Okay. You are also required to apply SA 700 because SA 700 by default will be applicable. I'm not saying that SA 700 will not be applicable. So SA 800 itself says that SA 700 will be applicable. The key reporting requirement, you have to apply SA 700. And over and above that, you need to talk about purpose. You need to talk about user. You need to talk about applicable financial reporting framework. You need to specify the EOM paragraph. Alert the readers over here that it may not be suitable for any other purpose. Okay. So in this case, you give the analysis of the particular question, what is given in the question, and then you give the conclusion. Request management for correction. Okay. Then, like, you need to understand whether management is ready to correct or not, or ready to correct the financial statement or not. If they refuse to correct, you may think it is a material misstatement and accordingly issue a qualified or adverse opinion, because again, SA 705 will be applicable. Basis of accounting, you need to specify. Then EOM paragraph, you need to specify, like, okay, draw the attention on the financial statement, state that it is not suitable for any other purpose, state that auditor's opinion is not modified in this particular respect. So these are the things you need to write as an opinion paragraph for this particular kind of scenario. Clear?
Yes.
Yes, sir.
Any doubt?
So will we write the paragraph also opinion para? Is it asking it in this
No,
question?
it is only for the purpose of understanding. It's see again till the time it is not asked in the question, you are not right. You are not required to write the
It is,
opinion paragraph.
it is saying that specific paragraph that must be included. Last line, sir.
Yeah, it is asking a specific paragraph that must be included, like kind of heading. They are not asking you to rewrite. If there is a requirement, then the question will be write the opinion paragraph.
Okay, sir. Thank you.
Sir, what about this line? The management also informs you that they plan to submit these financial statements to a bank to secure a new credit facility. What about this, sir?
This is covered by the restriction on use. So you need to provide restriction on distribution or use so that it should not be used by something else. First, it is only for the JV purpose. It is only for the JV purpose to be distributed to the venture partners. The moment you will add this paragraph, restriction on distribution and use, management will not be able to submit to the bank to secure new credit facility because this will be incorrect. If they do, it is not appropriate.
Yes, sir. Yes, sir.
Manish, this is the opinion, key reporting requirements that will be there. Opinion, modified, unmodified, that will be there as per SA 700, 705. SA 700 series will be applicable in this scenario. But over and above that, the key reporting responsibilities, considering the example, is one on the distribution or restriction on distribution. Second is the alert, creating the alertness that it is special purpose. Third, talking about purpose, user, and the applicable financial reporting framework. These are the key reporting requirements in accordance with SA 800. I hope I'm clear. Any doubt?
No, sir.
Okay. So let's take one more question. Again, very good question. On the similar lines, nothing difficult. Let us see this question.
Trustwell Family Trust, a private trust, is required by its trust deed to prepare annual financial statements on a cash receipts and disbursements basis, cash basis, to determine the annual distributions to its beneficiaries. The trust deed, dated 1st April 2018, lays down the specific policies for recognition of cash receipts and payments. For the year ended 31st March 2025, the trustees prepare the financial statements on this basis. The notes to the financial statements clearly describe the cash basis of accounting and state that the financial statements are prepared to comply with the trust deed and for distribution to beneficiaries. You are the statutory auditor of the trust, CA. Priya, of Priya and Associates. You have concluded that the financial statements are free from material misstatement and are prepared, in all material respects, in accordance with the special purpose framework, i.e., the cash basis as defined in the trust deed. During the audit, the trustees inform you that they also intend to submit these financial statements to a bank to apply for a mortgage on a property held by the trust. As the engagement partner, advise your team on the auditor's specific reporting responsibility to alert readers about this basis of accounting. Also, draft the specific paragraph required to be included in the auditor's report to comply with SA 800.
So in this question, we have the drafting requirement, but again, we will skip the drafting requirement. We will only focus on the reporting part, like what you will report and how will you report in your audit report. So take a minute, read the question again, and then try to answer. And we will not go for the drafting. We will only talk about the matters required to be reported. Okay. So how will you report here?
We will write the purpose of the financial statements, the intended users, the applicable financial reporting framework, in this case, cash receipt and disbursement basis. Then we will specify that the trust deed required these financial statements to be prepared on this basis. And we will also, in the EOM paragraph, specify that these are prepared for mortgage, to apply for mortgage of the for the bank loan security purpose, and also restricted use we will specify, and all the compliance requirement for SA 700 will be there, sir.
Yes, absolutely correct. So anyone else would like to add something to this? Okay. So again, yeah, absolutely correct. Here, as per SA 800, first of all, the requirement is to alert the readers by having an EOM paragraph. So you will specify, when you will write the answer, you will specify, okay, this is the requirement to have an EOM paragraph in the particular your report. So have an EOM paragraph, then specify that may not be suitable for any other purpose. This report might not be suitable for any other purpose. Again, when you are having an EOM paragraph, SA 706 will also be applicable. So it is to something, draw the attention of the user to the matter which is already there in your financial statement. And you need to provide the reference of the financial statement to that particular point. So how we draft an EOM paragraph? SA 706 talks about that, how we draft. Okay, but SA 800 says that have an EOM paragraph to do this. So use 706 to have an EOM paragraph for the purpose of drafting EOM paragraph that provide the reference of the financial statement, provide the reference of the relevant note of the financial statement, and then based on that, okay, you write all that particular which is required to be written. Then provide the analysis of the particular question in the when you are writing the answer, and give the conclusion. For the purpose, again, as I said, we did not discuss specifically for the drafting part, but if you want to draft, if you want to understand how drafting is there, see, we draw attention to the note this of the financial statements. Now this is where the reference is required to be given, because it's an EOM paragraph which describe the basis of accounting. The financial statement are prepared in accordance with the cash receipt and disbursement basis of accounting as stipulated in the trust deed dated 1st April 2018, which is a special purpose framework. As a result, financial statements may not be suitable for another purpose. Our opinion is not modified in this matter. There is one more thing I want to show you, something similar that we discussed few, at the start of the session only. See this one. Restriction on use, which is there in this public document that we discussed earlier. What it says that The report is addressed and is provided to enable the board of directors of the company to include this report in the offer document prepared in connection with the proposed initial offering of the equity shares of the company to be filed with the company with the SEBI, BSE, NSE, ROC, National Capital Delhi, Haryana in New Delhi in connection with the proposed IPO. Our report should not be used, referred to, or distributed for any other purpose except with our private consent in writing. Accordingly, we do not assume any liability, duty of care for any other purpose to any other person to whom this report is shown or in whose hand it may come without our prior consent in writing. One of the example of the paragraph for the restriction on use. Remember, we discussed also there should be a restriction on use or distribution of use paragraph. So this is how you can draft. Plus, if I have to show you just here. See, again, you can take this as an example, but the nearest example. Why nearest? I'll tell you later on why I'm saying nearest example. See, here it is given like has been prepared in accordance with the Act, SEBI ICDR regulations and the guidance note prepared after incorporating adjustment of material error retrospectively, all these things, whatever are there. Okay. So they are saying what is the basis of preparation of the financial statement. Kind of they are providing the description on the financial reporting framework, the special purpose framework. Okay. And there are, some more things that basically when it is special purpose framework financial statement, usually auditor writes. For example, see this one. That the report should not in any way be construed as a reissuance or redating of any of its prior year audit reports issued by us on the financial statement of the company. Kind of, providing that it's not a, new report by superseding the old reports. It's not something that we are cancelling the old reports and issuing a new report. So it, kind of a special scenario, you can say if, it's necessary to report like this way, you can add this paragraph. Okay. So this is one example that I wanted to show you that how in actual or practical life also restriction on use or mentioning the financial reporting framework, special purpose, and creating this particular paragraph where you provide the okay, this is as per the special purpose framework is done. Any doubt? Any doubt till now?
So we will be asked to write the EOM paragraph only or the complete report as per SAT.
In exam, you might not be required to write the EOM paragraph. But again, depends upon the question, what question is. But basically, what is the requirement here? See, what is the requirement? Okay, what is the basic thing you need to understand? You need to understand the meaning of special purpose framework. You need to understand the special considerations. Okay, you need to gain the knowledge about how to, do the acceptance planning, performance, or reporting of such type of engagement. May not be related to drafting, but yeah, that's something is required over here. I hope I'm clear.
Yes.
Okay. Any doubt till now? Any doubt? Okay. If no doubts, then let's take a quick 10-minute break. After the break, we will continue the session. Let's take a quick 10-minute break. Thank you, sir. going to discuss about the next standard, which is SA 805. 805 talks about special consideration, again, audits of single financial statement and specific element accounts item of a financial statement. Now, what is that? What is that? What that means? And we need to understand what is single financial statement, what is specific item or element that we are talking about over here. Okay. So, can anyone tell me what is single financial statement? What is single financial statement? Anyone? What do you mean by single financial statement?
A P&L, a balance sheet
Very
individually,
good.
not
Yes,
together, separately. I mean, like individually. Cash flow.
correct. Absolutely correct. So when I talk about single financial statement, like statement of profit and loss, balance sheet, statement of changes in equity, cash flow statement, these are the single financial statement. And when I talk about element of financial statement, that means a particular item from those financial statements, a particular item or an element from those financial statements. That will be a single specific element, accounts or item of those financial statements. Okay. So SC 805 talks about when you have to audit a single financial statement, at that point in time, use this standard. But why do we need a separate standard when we are auditing a single financial statement? What is the purpose? Like, what is different over here? Why it is considered as a special consideration, special case? Why do you think it is this requires a special consideration? Anyone? Why do you think this requires a special consideration? What is special in this? What is so special in this? Okay, tell me one thing. Let's say, for example, if I ask you, okay, audit P&L only, do not audit balance sheet. Can you do that? Can you issue an opinion on P&L itself? Okay, hypothetical example. Let's say while auditing the P&L, you identify that there is some transaction in the trade receivables. Or let's say, for example, during the year sales is fine, during the year purchase, fine, expenses, good to go. But when it comes to the payment to those creditors, there is some issue. There are creditors which are not being paid since ages. Like ages means since 7 years, 10 years. Huge creditors not being paid since 10 years. How will you come to know that there are these kind of creditors unless and until you audit the balance sheet? But I'm asking you, no, audit only P&L. Will you be able to audit the profit and loss account without looking the other things?
No, sir.
It is very, very difficult. And at times it may lead to incorrect opinion. See, for example, depreciation. I know for the fact depreciation, I can do a calculation from the P&L point of view. But till the time I don't verify the physically verify the fixed asset, I may never come to know the condition of that particular fixed asset. Simple inventory. How much provision is required to be booked? You need to validate the inventory. Physical verification. Similarly, let's say daters. How much provision is required to be booked onto the daters? You need to go and check the balances. So you can't really do the audit of P&L unless and until you don't see the underlying data, which may include balances also. That's why auditing a specific element, account, item, single financial statement is a special scenario which requires a special consideration. Okay, let's say for example, I'll give you an example. You tell me how will you deal with it. I ask you to do the separate audit of profit and loss account, and I asked another auditor to do a audit of complete set of financial statements. When he did the complete set of financial statement, audit of complete set of financial statements, okay, so complete financial statement had an adverse opinion. Why? Because let's say uh, yeah, loans given interest free, evergreening, okay, no repayment is being done, and to whom it is given, the parties do not exist. Or you can say bankrupt. That is on the loans, because of which there is an adverse opinion because this amount is more than my profit. Or let's say 50% of turnover. Now, I ask you to audit the profit and loss account. There is no misstatement in that. Which kind of opinion you will issue? Which kind of opinion you will issue? Or let's say not even P&L. I asked you, like this also includes the accounts or specific item, no? So I asked you to audit only credit side of P&L or incomes, turnover, and or those things. So you are auditing only credit side of P&L, a separate report on credit side of P&L. What kind of opinion you will issue? Anyone? No? Okay. I'll give you options. Unmodified, qualified, adverse, disclaimer. 4 options. Unmodified, qualified, adverse, disclaimer. Which opinion you will issue? Now you have to select option. Okay, let's guess. What? Okay, I'll not ask you the reason. Just give me the opinion. Which opinion you will issue? I'll not ask the reason. Whatever you think it is appropriate, tell me. Am I audible to you guys? Yeah. Okay. Unmodified. Yes, good. Okay. What else? Any other different kind of opinion you guys will issue? Now, this is a very big problem. Because we are auditing a specific account, element, or item, it's not easy to decide what kind of opinion to be issued. Because it may happen the element, item, account, or the statement that you are auditing does not contain any misstatement. But there are other misstatements in other areas which might not be, impacting your area. So if I have an opinion that one particular statement, let's say statement of cash flow, forget about this credit side of P&L. Let's say I ask you to audit cash flow statement. Okay. I ask you to audit the cash flow statement where there is no misstatement. But this cash flow statement is already part of another opinion, which is the complete financial statement over which there is an adverse opinion. Now, if you say disclaimer of opinion, but again depends upon how it is impacting, where it is impacting, what is required to be done. That's the thing we need to understand. See, special consideration when I say audit means SA 200 to 700 will apply. We have seen that. I'm not here to discuss 200 to 700. You guys already know how to apply 200 to 700. Yes or no? We are only here to discuss the specific scenario or the special considerations that will be applicable in this scenario. Okay. Number two, this essay does not apply to a report of a component auditor. Okay. Let's say, for example, group auditor is asking you to give specific information audited. Okay. We have seen in SA 600 that group auditor or the principal auditor may ask us to provide additional information, may ask component auditor to provide additional information. At that point in time, component auditor are required to provide that additional information to principal auditor. So that additional information which is audited is not as per SA 805. It is same as per SA 600. So to that particular extent, SA 805 will not be applicable. Okay. So SA 805 is not applicable to the report of a component auditor, which is prepared at the request of the principal auditor. In that particular scenario, this is again scope of SA 600. It will be governed by SA 600. Okay. Now, we understood like, again, SA 200 to 700 will be applicable. So engagement, acceptance, planning, forming an opinion, everything that we have discussed will be applicable. We understood what is the element, single financial statement, element of financial statement. The only critical part here we need to understand is special considerations. Number one, when I talk about special consideration, remember one thing that here I am not saying it's a special purpose framework. I am not using the word special purpose framework. No. Have I used the word special purpose framework over here? No. What I'm using the word is a financial statement. Now, these financial statements can be general purpose financial reporting framework or special purpose financial reporting framework. Both can be there. Okay. So the single financial statement can be prepared in accordance with the general or special purpose framework. Both will be covered in this particular scenario. It is not only related or restricted to special purpose framework. The way we have discussed in SA 800, special purpose framework, that is there only. Now that is done. We are talking about general and specific both when we come to 805. Clear? Okay. Now, when I talk about general or special purpose framework, both are applicable, both financial statements are there. So any element of those financial statements will be counted as a single financial statement, specific elements or accounts or everything that we have discussed till now. Now, when I say that you need to apply SA 200 to 700, everything to the extent they are applicable. For example, if it is not a joint audit, then why will you apply to SA 299? There is no need for that. Let's say, for example, there is no involvement of service organization, you will not apply SA 408. So whatever SAs are applicable, you will apply in entirety, otherwise you will not apply. Okay, so 200, 210. Again, you need to understand what is the scope of audit, preconditions. Everything that we have discussed will be applicable the way it is applicable in the other scenarios. So 200, you need to comply with ethical requirements. You need to comply with all the essays relevant to the audit, whatever it is there. The essay which is not relevant or not required, okay, you can remove it. Entire essay is not relevant. Okay, or the requirement is not relevant because those are conditional and condition does not exist. So at that point in time, you can ignore that essay perfectly fine. Otherwise, everything will be applicable. Same, the requirements, for example, SA 570 will be applicable. For example, laws and regulations will be applicable. But the question comes is to what extent? Now, let's say, for example, we are talking about SA 570. Okay, I'm talking about SA 570. Now, will you report on SA 570 when you are doing audit of a single FS? Do you think you will report on SA 570? What is 570 about?
Going concern.
Let's say, for example, I ask you to audit the cash flow statement. Will you report on SA 570? Yes, no, can't say. At least try to
No,
answer.
sir. No,
Yes, sir.
sir.
Okay. I'm asking it should be yes. Why do we know? Okay. But having said that, that depends upon, see, when I talk about going concern assumption, it is applicable to entire financial statement. You pick up a line item and tell me which is not prepared as per the going concern basis. It is a base of accounting which we follow, going concern. Even if I ask you to audit a specific item, there are chances that, if you don't follow going concern, that will be reported something differently, entirely different. So these fundamentals, whether it is a specific item, whether it is the single financial statement, the fundamental will remain same. If I say there are material, if I say there is a material uncertainty and the use of going concern basis of accounting is not appropriate, then for that particular specific item also it is not appropriate. For that particular account, for that particular single FS, it is not appropriate. If I say going concern basis is not there, pick up any line item from the FS except for cash. Except for cash, pick up any line item and it will have the impact. Yes or no? So that these fundamental things will remain, will be applicable. For example, SA 240. Do you think if you are auditing the cash flow statement, you are required to apply SA 240? Sir, now only you discuss that all SAs are applicable. Just now you highlighted that. Then we need to apply SA 240 also. But what is the logic behind it? What is the logic behind it? Why to apply 240? Fraud. If I'm doing the audit of cash flow. Anyone? The reason because is that even a single line item, single account, single statement can be influenced by, can be, you can say, affected by fraud. So as a 240, 260, 250, then 550, 570, 560, everything will be applicable. Those line items, those accounts may be impacted by subsequent events, related party, fraud, laws and regulations. You have to consider that. Yes or no? So it doesn't make any difference whether that is a specific item or a single FS. Most of the standards will be applicable. As I said, certain standards will not be. For example, joint audit. If it is not a joint audit, then SC 299 will not be applicable. If it is not a service sector service organization, then 402 might not be applicable. If it is not a listed, you are not issuing opinion as per on the listed entity, 701 might not be applicable. So to the extent, to the requirement, if the item is there, that will be applicable, otherwise it will not be there. Then the next question comes is, how will you determine the materiality? If everything is applicable, SA 320 is also applicable. How will you determine the materiality? Tell me, how will you determine the materiality? Yes, no. Do you think we will determine the materiality in this scenario for the audit?
Yes, sir.
And how will you determine?
It will be at a lower level.
Lower level, yes. Good. Anyone else? Anyone else? See, there are two ways. I may take up a performance material. What is performance materiality? Which is applicable to specific items, specific line items. I may take up a performance materiality. But at the same time, I should not blindly take up the performance materiality. I need to evaluate what is relevant for the particular user of this item, FS or account, whatever it is. So what is relevant from this point of view? Or you may take that particular item as a benchmark and apply the materiality. So in case of single FS, in case of single item, materiality is not that complex the way it is there in the special purpose framework. But yes, there is an exercise which is required to be done to determine the materiality. Okay. Then again, as I said, all the relevant things will be applicable. For example, 570 will be applicable. For example, understanding the entity and its environment through the internal control as a 315 will be applicable. You need to do all the things which we have done. You need to collect the audit evidence. You need to analyze the audit evidence. The respective audit procedures, everything will be applicable. Now, where is the change? The change comes when we have to look into basically reporting part, because auditing a single FS or auditing the entire FS. So when you do an audit of entire FS, you prepare the audit plan item wise. Okay. So here the audit plan of that particular item will be applicable. It may be, more or less based on the materiality, but yes, that will be there. So as I said, SA 200 fine will be applicable. 260 will be applicable. 240, 570, 550, all these will be applicable. Not an issue. But the only part where there will be a major change will be an opinion. Forming an opinion. Now, why? Reason because here we are issuing an opinion on a single financial statement. We have to understand that when we are issuing an opinion on a single financial statement, already SS 700 to 720 all are applicable. Okay, 700 to 720 is already applicable. You don't have any exemption over there that you should not be applying. No, you need to apply. Now the question comes is, when I apply SA 700 to 720, there is a specific requirement. A particular financial statement should not have two different opinions. A particular financial statement should not have two different opinions. Which essay contains this requirement? Tell me. Which essay contains this requirement? Anyone? Okay, very good, Sanjay. Let us see this requirement, which was there, okay, in one of the essay. So, essay 705. Now, essay 705 has a specific requirement, which talks about having, when you are having adverse opinion or disclaimer of opinion. Because in case of qualified opinion, still it is one item which is might not be appropriate. There is a misstatement, but entire FS and other items are fine. So qualified is still fine. But when it adverse or disclaimer of opinion, at that point in time, SA 705 specifically says that when it is necessary to express an opinion, which is adverse opinion or disclaimer of opinion on financial statement as a whole, the auditor report shall not include an unmodified opinion with respect to the same financial reporting framework on the single FS or one or more specific elements, accounts, or items. This is related to the single FS what we are talking about, SA 805. So, para 15 of SA 705 says that you should not include two different opinions. That is, if you are issuing an adverse opinion or if you are issuing a disclaimer of opinion on the financial statement as a whole, in that particular scenario, you should not or shall not include an unmodified opinion with respect to same financial reporting framework on single financial statement. Now the question comes is, it says not issue unmodified opinion. So can I issue a qualified opinion when there is an adverse or disclaimer of opinion? Because I'm issuing a modified opinion, it is not an unmodified opinion. Yes or no? So in that particular scenario, yes, you can issue a modified opinion. It is fine. Okay, because the term here is unmodified opinion. The reason behind this, let's say for example, there are multiple misstatements in the financial statements. Cash flow misstated, balance sheet misstated, P&L misstated. Now, when you issue a financial statement like single opinion on the cash flow, there might be one small misstatement which is material but not pervasive. At that point in time, you can issue a qualified opinion, and on the entire financial statement, there could be adverse or disclaimer of opinion. But there are scenarios where you may require to issue. See, usually, generally, this is the requirement. Okay, this is a general rule. But this general rule has an exception. This is a general rule. But it has an exception. Now, what is that exception that we need to understand? See, for example, when you were doing the audit, there was a material misstatement in the loans, which could which can impact drastically your P&L and balance sheet, but might not impact the statement and changes of equity. Statement of changes in equity, single FS, you are issuing an opinion. Now, at that point in time, you think that, okay, it is a statement of changes in equity. Am I required to still give a modified opinion when in actual there is nothing wrong in that? In actual, when there is nothing wrong in that particular item. So, this exception is only applicable in the rare case scenario. And for that, what you need to do is, number one, let me take you to that one. Sorry. Just give me a minute. Stuck. Okay, let me write it here. Number one, you need to check whether auditor is prohibited from doing that. Is there a prohibition in law? So whether law prohibits. Number two, you need to check that whether your opinion, like both the opinions, will be published together. Okay, so is it something that whether they will publish together or not? The requirement is that it should not be published together. Both the opinions should not be published together. That is a requirement. If they are published together, then there are high chances that the reader will get confused. So should not be published together. Should not be prohibited by law. And the third requirement, it is that the element or the portion, the account should not constitute a major portion. So the element should not be major portion of complete FS. Okay, it should not be major portion of complete FS. So these are the three conditions that you need to make sure are satisfied. Then only you can go under this exception. Clear?
No, sir.
Otherwise, yeah.
So the exception is not clear. What is the exception? I'm little confused about. Exception as to that we have already stated that if there is a disclaimer or an adverse opinion, then we cannot give a modified opinion. So is it an exception to that?
Yes, means two different opinion. Adverse opinion on the complete set and unmodified opinion on single FS. That is only possible through this exception when permitted by law. Both opinions are not published, and the single FS or whatever portion it is, it should not be a major portion of the complete FS.
It will be permitted by law, not prohibited by law, because there cannot be a permission granted to publish two different opinions. So it will be deemed that it is not prohibited by law.
No, you need to check whether law prohibits. So there could be a scenario, let's say for example, where regulatory requirements prohibit this kind of scenario. You cannot have two different opinions. At that point in time, you should not. But what if it is a special purpose framework? Remember, as I said, it is applicable to both scenarios: general purpose, special purpose. Now, it may be a scenario where special purpose framework is under a contract or under cash basis for some specific users. Over there is no prohibition by law. So you need to think whether there is a prohibition by law or not.
Okay, sir.
Any doubt with this particular exception? Any doubt? Okay. So let us go to the study material. So as I said, again, all the relevant standards will be applicable. Okay. So you need to apply SA 700, which is there, which will be applicable the way it is. Then, so you need to see which financial reporting framework it is applicable. Is it a compliance framework? It is a fair presentation framework. Accordingly, your wordings will be there. So, for example, if it is the compliance frame or if it is the fair presentation framework, in that case, you need to use the wordings gives a true and fair view. If it is a compliance framework, then you may use the word in all material respects. Okay, so the wordings will be decided based on the type of framework that is there. Then, accordingly, you need to see what are the scenarios, what are the things applicable to that particular opinion. Are you required to include key audit matters based on that particular area, particular single FS? Is it necessary to include a going concern paragraph? Is it necessary to include a key audit matter? Is it applicable? Let's say, for example, the complete set of general purpose financial statements have the key audit matters, or they have a key audit matter related to this specific area which you are auditing separately. Are you also required to issue a key audit matter in your report? Or whether is there any key audit matter in your area, in your FS, which you are auditing? Again, other information. So if your single FS or if your opinion is being published with the other information, then same your responsibility with respect to the other information will also apply over here to that particular extent, to that particular FS. For example, you are issuing an opinion on PNL. Now there is entire annual report along with that, with the opinion on the PNL. Now the numbers in the PNL might be similar numbers which are contained elsewhere in the annual report. So your responsibility to that PNL numbers with respect to the other information across the annual report will be there the way it was there in the SA 720. Then you should have signature audit of the auditor and all those stuff that is there. Okay. So that is one of the part which is really, really important that you need to understand. Number two, now if there is a qualification, we need to understand about the qualifications which are there in the complete set of FS, and you may want to refer to that qualification in your report. Okay. So if you want to refer a qualification in your report, if you want to qualify based on, let's say, if there is a qualification in the complete set and accordingly it is applicable to you also, you need to think what is the nature of the matter of that particular qualification in context to the complete set versus your single financial statement. For example, let's say there was a qualification on trade receivables in the complete set. How it is applicable to the PNL, how it is applicable or related to the sales. Are you required to include the same? Are you required to bring the same? Is it relevant from your point of view? It's not necessary that, okay, there is a qualification on trade receivables, then definitely I should include in my report also. But again, you need to think from the point of view that how that qualification is impacting your area, how that qualification is impacting your portion, how that qualification is impacting your FS that you are auditing. The pervasiveness might be, let's say, for example, there was a qualification with respect to cash flow. Okay. Now, there was a qualification with respect to the cash flow. Might not be you can say material but not pervasive from the point of view of entire set of financial statement. But when you are auditing only cash flow, it may be pervasive. You may issue a different opinion. So I'm talking about a scenario where complete FS either qualified or unmodified, but your single FS specific element or account showing adverse opinion. Is it possible? So I am saying the complete set is unmodified, but your specific element is adverse. The earlier example that we saw was reverse. Here, the complete set was adverse, but specific scenario or specific element we were talking about being unmodified. Now I'm talking the reverse of this. Complete set, unmodified, specific scenario adverse. Is it fine? Anyone? Do you think it is appropriate that I have an adverse opinion on single FS where the entire FS has an unmodified opinion or qualified opinion? Anyone? Yes, no. So basically it is, but you need to consider few factors for that. It is permissible, it is not prohibited kind of thing. There could be a scenario, these scenarios can happen, but you need to consider certain factors for that. Okay. And those factors are, you need to think of the nature of the matter which is there. What is that matter? And how it is related to the single FS specific element of the financial statement. Number two, the pervasive of the matter with respect to the complete set of financial statement and the specific item that you are auditing. The nature and the extent of differences between the financial reporting framework, the nature and extent of the difference between the period if there is a different period. Okay. Then time elapsed since the date of auditor's report on the complete set versus your individual. It may happen that the complete set was issued in August. Now you are auditing single FS in the month of December. It may happen that the complete set was having different period. You are having a different period. Possible. Not necessarily the period of the complete set and your will be same. Not necessary that the complete set is on general purpose. You may have a single specific P&L or balance sheet or as per the specific purpose. So you need to consider the framework, time difference, when the report was issued, even the same period, but when the report was issued. The pervasiveness of the matter with respect to, or the materiality of the matter with respect to the single FS versus the entire FS. Okay. The nature of the matter which is there. So all these things are required to be considered. Then based on that, you need to draft your opinion. Clear? Any doubt till now?
So one question.
Mm-hmm.
So will the auditor accept a single financial statement audit if he is not auditing the entire general audit? If he is not the auditor of a general audit, will he accept that?
Could be, yes, he can accept that. There is no bar basically on stopping him from accepting that.
Okay.
See, why I'll tell you he will accept. Reason because there are scenarios where a specific item is required to be re-audited. I'll give you one scenario. Let's say, for example, there was a search conducted under the income tax. and there was one requirement that the revenue or the sales should be re-audited. Why not to accept? Or for example, there was a money laundering case going on, and it was a requirement that the cash transactions, cash inflows should be re-audited. Why not to accept? So there are scenarios, regulatory, non-regulatory, where, let's say, for example, dissolution of partnership. Now, at the time of dissolution of partnership, some partners were not happy with the way things were there. They wanted to understand, no, we are not comfortable with the expenditure done on this particular area. We want a re-audit of that. Why not?
Thank you, sir.
Any doubt? Any other? Any other doubt? So that totally depends upon the type of the engagement, and a lot of things are there. But again, you need to think from that point of view. Okay. So accordingly, you need to consider the matters which are given in the complete set versus how much it is applicable to the single set. Okay. Now, let's say, for example, taking your example only, let's say you are being appointed or I am being appointed as an auditor for the complete set. And at the same time, some partners of the partnership firm want a separate opinion on the, let's say, a particular type of expenditure, scientific expenditure, let's say. Okay. So now in this scenario, will you issue a combined opinion or will you issue a separate opinion?
Separate opinion.
I am auditing any which ways, both the complete set. I am auditing the complete set, and now I am also auditing, let's say, this single particular line item also.
Yes, sir. So separate opinion.
Anyone else with a different answer? Anyone? No? Yes? Okay. So, yes, it should be a separate opinion. You should not combine the opinion when there are two separate engagements. See, in this particular scenario, the engagement is different. It's not the same engagement. It is different engagement. Okay. One engagement is for your complete set of financial statement. Another engagement is for the specific item, specific line item, or specific set of items or single assets. So when there's a different kind of engagement, when there are two different engagement, you should not mix that particular opinion. Issue separate opinion for each engagement. Okay. So issue, that's the one of the requirement, that if you undertake single FS plus you undertake the complete set, audit of complete set, in that case, issue separate opinion for each engagement. Do not mix up those particular opinions. Any doubt till now? Okay. On page number, basically, you can say 8.80, you have the conditions that we saw in case of SA705. So you can provide reference to para 15 of SA705. Okay. So these three conditions: auditor not prohibited by law from doing so, the opinion expressed should not be published together, element should not constitute a major portion of the entity's complete set of financial statements. Same as SA 705. So that was your SA 805. Any doubt with respect to any of the part of SA 805? Any doubt or any question on any of the part of SA 805? No? If no doubts, can we take some questions on SA 805 so that we should know how to practice and answer this particular part? Before that, I have a quick recap question for SA 800. So let's take that also. And then we will take up the SA 805 question also. Okay. So let me read the question.
MS Venture Partners, a joint venture, prepares its financial statements in accordance with the financial reporting provisions stipulated in its joint venture agreement. This agreement requires accounting on a cash receipts and disbursements basis, a special purpose framework. The auditor, CA DIPA, has concluded that the financial statements are prepared, in all material respects, in accordance with this framework and that the framework is adequately disclosed in the notes. The financial statements will be provided to the joint venture partners and also to a bank for a loan application. Which of the following reporting actions is mandatorily required by CA DIPA as per SA 800, special considerations, audits of financial statements prepared in accordance with a special purpose framework?
So this is the question. We have the options. So the options are
A. Issue a qualified opinion, as the cash basis of accounting does not fairly present the financial position. B. Include an other matter paragraph stating that the audit was conducted as per a special purpose framework. C. Issue a disclaimer of opinion because the financial statements are not suitable for all users, such as the bank. D. Include an emphasis of matter paragraph alerting users that the financial statements are prepared in accordance with a special purpose framework and may not be suitable for another purpose.
So this is the question. I would suggest read for a minute, take a minute, read the question again, and then try to select the option. Very good, Sanjay. If anyone has the answer, they can give it. Perfectly fine.
D, sir, D.
D. Okay. Yes, yes, Prashant. Very good. Correct. Yes, Ethel. Very good. Yeah. So again, we have discussed multiple times. The auditor is required to include a emphasis of matter paragraph with respect to the special purpose framework. Now, qualified opinion, other matter paragraph, disclaimer of opinion is not required. So again, there is no need for qualified or disclaimer of opinion just because it's a special purpose framework. Okay. So here, the correct answer will be D, not C, B, and A. Straightforward, we have practiced much. So nothing difficult over here. Let me proceed to the next question. Okay. So let me read this question. Good one. So let's see.
CA Shruti of Shruti & Co. is the statutory auditor of Zenith Innovations Limited, ZIL, for the financial year ended 31st March 2025. In addition to the audit of the complete set of financial statements, ZIL has engaged CA Shruti to conduct a separate audit of the inventory balance as of 31st March 2025.
Now there is a separate element which is required to be audited along with the complete set.
This separate report on inventory is required by the company's bankers for compliance with loan covenants. During the audit of the complete set of financial statements, CA Shruti was unable to observe the physical inventory count at one of the company's major manufacturing plants. The inventory held at this plant is considered material. Furthermore, she was unable to obtain sufficient appropriate audit evidence regarding the inventory quantities at this plant using alternative audit procedures. This inability to obtain evidence is material, but not pervasive, to the financial statements as a whole. Consequently, CA Shruti plans to issue a qualified opinion on the complete set of financial statements. As the engagement partner, CA Shruti is now considering the implications of this qualified opinion on her separate audit of the inventory balance. Discuss the factors that CA Shruti must consider, as per SA 805, in determining how the qualified opinion on the complete set of financial statements will affect her audit and report on the inventory element.
So basically here you need to think that what is the opinion on the complete set, what and how it will impact the opinion on the single element. So you need to talk about the factors. The question here talks about discuss the factors. Okay, focus on that. Take a minute, read the question and then try to answer. Okay, now tell me, what are those factors?
Pervasiveness of the matter,
Okay, pervasiveness of the matter.
nature of the matter, the audit she is performing, the single item of the inventory. These will be the affecting the opinion.
Okay.
Factors which will be considered by her.
Yes.
The framework,
What else?
the time element,
Time element. Yes, very good. Anything else?
so the question said she was unable to observe the inventory count. So it does not specify why she was not able to observe the inventory count and why she did not take the alternative audit procedures which were available to her, or I mean it is completely silent to those aspects. So we will not refer to them at all in our answers.
No, because we will assume that
We will
that
that the result was available and it was not due to her lack of effort. It must be due to some physical impossibility or some of those conditions. We will assume
yes,
that. We cannot assume that she's lapsing on her part because we cannot assume that.
yes. So as of now, we will not assume that she was, not there was a gross negligence on her part. Okay, we will assume that it is something, a limitation from the management side, because here, if there is a gross negligence or something, it will be specifically given.
Correct, sir.
Yes. So pretty much you have covered everything. Okay. Again, we will go to the study material for this particular answer. We will see what are those points. So as discussed, the factors that will impact. Okay. Just a minute. Let me take you to that. Oh, here. The factors that may be relevant in considering those implications include nature of the matter, okay, which is being described in the auditor's report on the complete set, and to the extent it is related to what is included in the single FS or specific element. For example, inventory. Inventory was described in the complete set and how much it is related to the single item that you are auditing. Number two, pervasiveness of the matter with respect to the complete set, because if it is pervasive to the complete set, then 100% it is going to be pervasive to the to a single element. So there are high chances, not 100%, but there are very high chances that it is pervasive to the single element. Nature and extent of the differences with respect to the applicable financial reporting framework. Now this is between the complete set and single element or specific FS or single FS or specific element. Okay, so your single FS or specific element might be on the different framework. They might ask you to audit as per the different framework. Extent of difference between periods covered by the complete set and the single FS or specific element. So what is the period difference between both of them and the time elapsed since the date of auditor's report on the complete set? Okay, because it will directly impact the audit evidence available, conditions present at that point in time. Okay, subsequent events, a lot of things will be different when you are auditing a lot later compared to you are auditing, in that particular year. The main impact of this point comes on the hindsight. For example, you are auditing data, okay, and there are data in the complete set, and there are now you are auditing data of, let's say, 3 years before. But today you know how many data out of that went bankrupt. But at that point in time, you might not have that information. Provision might be different. Some information that is subsequent event, which is available right now to you, might not be available at that point in time. So you need to think the time elapsed from the date of auditor's report on the complete set versus your report. So those things will come into the picture. So these are the factors that you are required to consider for the qualification in the complete set versus the qualification that you want to include your specific item or single FS report. In order to write the answer, what you need to do is specify the particular provision first. Okay. In this scenario, the provision SA 805, you need to specify these points: nature, pervasiveness, effect of the matter, all these things point that we discussed. Okay, and then you need to provide your analysis. What is the analysis of the matter? And then accordingly you give the conclusion. What is the conclusion that you think will be relevant from that point of view? Clear with this particular answer and the question? Any doubt?
So will she issue a disclaimer of opinion, or
In this particular scenario, see, here in actual it should be a kind of disclaimer of opinion or adverse opinion, because the inventory was material and now she is issuing a separate opinion on the inventory. So inventory which was material was not able to get the audit evidence. So in this scenario, usually it should be a disclaimer of opinion because she is not able to get the audit evidence.
yes?
Any other doubts? Any doubts? No? Okay. If no doubts, let's take one more question. Kind of an MCQ, but again, good to practice. We'll read the question first.
CA. Aman has been engaged to audit only the statement of cash flows for XYZ Limited for the year ended 31st March 2025. He has also been engaged as the statutory auditor for the complete set of financial statements for the same period, on which he plans to issue a separate audit report. During the audit of the complete set of financial statements, CA. Aman discovers a material misstatement in the valuation of inventory, which is pervasive to the financial statements as a whole, leading him to conclude that an adverse opinion is necessary on the complete set of financial statements. In this situation, what is the most appropriate action for CA. Aman regarding the separate report on the statement of cash flows, as per SA 805, Special Considerations, Audits of Single Financial Statements and Specific Elements, Accounts or Items of a Financial Statement?
Okay, so this is a question. Take a minute, read the question, and then try to answer.
Can you, sir, show the D option?
Yeah. So let me zoom out a bit. We'll give you space to read. Yep. Okay, Prashant, very good. So what is the question? Question is CA Aman has been engaged to audit the only statement of cash flow. Okay. He has been also been engaged to audit the complete set. Now during the audit of complete set, he discovers material misstatement in the valuation of inventory. Pervasive and material, leading to an adverse opinion. Now what he should do with respect to the cash flow? Okay, very good, Geeta. Okay, Sanjay. Okay, so I have got multiple answers over here. Let's discuss all the options, okay, and which will be the correct one. Very good, Hetal. Okay, so let's see which option is correct. Now we'll go one by one. Option number one. Option A says that he can issue an unmodified opinion on the statement of cash flow, provided it is not published together with the auditor's report containing the adverse opinion. Okay. Second option, he must issue an adverse opinion on the statement of cash flow as well, because the matter is pervasive to the complete set of financial statements. It could be C, he cannot express an unmodified statement, opinion on statement of cash flow, as it's a single financial statement derived from the complete set on which he has issued an adverse opinion. And D, he can issue an unmodified opinion on the statement of cash flow, but must include other matter paragraph referring to the adverse opinion on the complete set. See, out of ABC, D is for sure not an option, not a correct one. We know that. So there is no point of, there was no discussion of other matter paragraph. So D is not the correct one, for sure. Now coming to A, B, and C. Let's go first with A. Okay. He can issue unmodified opinion on the statement of cash flow, provided it is not published together with the auditor's report containing adverse opinion. This is incorrect. Why? Anyone? Why this is incorrect? Anyone? Because pervasiveness? No, there is something more to that. So remember the exception. Exception has three conditions. This is only one condition. There are two more conditions. I have to satisfy those two more conditions also. One is the law, and second, that particular portion should not constitute a major portion of the complete set. It is not written about those two conditions. That's why A will not be the correct answer. I
So
cannot.
in MCQs, all the conditions will not never be given, sir. Like,
No, so in that case, which is most near one? This is specific condition. That means you have to apply. You cannot assume that the condition is already fulfilled. What is the general rule? We need to follow that compared to the specific one. If there is a specific condition, you need to first see whether specifically it has been specified. If yes, then only go for that. Otherwise, the general rule will always come first. Now, option number B is also incorrect. The reason because adverse opinion. The particular general rule says that when there is an adverse opinion, you should not issue, shall not issue unmodified. As I discussed, it could be disclaimer, it could be qualified, it could be adverse, anything. But you should not issue unmodified. There is no requirement to issue only adverse, because it's an adverse, then match with adverse. So B is also not the correct one. The correct one is he cannot issue unmodified opinion, has to issue modified. This is a general rule. This is the general one which will be applicable. And specific will only be applicable if I have the specific information available. Otherwise, it will not be. Clear?
yes, sir.
Any doubt with respect to this particular question? Any doubt? Okay. If no doubts, can we take one more question on the same topic? Again, it will be really, like will help us in understanding the topic itself.
Yes, sir.
Let me read this particular one.
Veritas & Co., Chartered Accountants, are the statutory auditors of Novatech Solutions Limited, NSL, for the financial year ended 31st March 2025. NSL is a software development company that has a profit-sharing agreement with its key managerial personnel, KMP. According to the agreement, the KMPs are entitled to a bonus equivalent to 5% of the net profit before tax, which is a specific element of the statement of profit and loss. The management of NSL has engaged Veritas & Co. to undertake a separate audit of this specific element, net profit before tax, and issue a separate auditor's report, as required by the KMP agreement. During the audit of the complete set of financial statements, Veritas & Co. discovered a material misstatement in the valuation of trade receivables. Management has refused to make the necessary provisions for expected credit losses, ECL, as per Ind AS 109. The auditors have concluded that this misstatement is material but not pervasive to the financial statements as a whole. Consequently, they plan to issue a qualified opinion on the complete set of financial statements. As the engagement partner, discuss the considerations your audit team must evaluate as per SA 805 regarding A. The acceptability of the separate engagement to audit the net profit before tax.
Okay, so we'll go one by one. Again, take a minute, read the question, and then we will, discuss this particular. Sorry, discuss the particular option. Question number one and question number two, A and B both. Okay, tell me. So, what do you think? Should they accept? Yes, no. How the acceptability will be impacted here? Okay, so what is the basically scenario? I'll explain you. So there is a company, Novatech Solutions, and Veritas and Company are the statutory auditors for the financial year 31st March 2025. So NSL is a software development company, profit sharing agreement with its key managerial personnel. According to the agreement, they are entitled to a bonus of 5% of the net profit before tax. Okay, which is a specific element that we are talking about. Now, the management of NSL has engaged Veritas to take a separate audit of the element of net profit before tax and issue a separate auditor's report for the KMP under the agreement based on the KMP's requirement. Now, during the audit, there is a misstatement identified in the valuation of trade receivables. They need to book the provision as per the expected credit loss, which is not booked. Material but not pervasive. They plan to issue a qualified opinion on the complete set of financial statements. Now, as an engagement partner, you must discuss the two things. Number one, acceptability of the separate engagement to the audit the net profit before tax. Is there any problem that you should not accept the separate engagement to audit the net profit before tax? Number one. Number two, the implications of the qualified opinion of the complete set on the your separate report. So these are the two things that we need to discuss. Should you accept the audit, this separate audit? Yes or no?
Yes, sir, if three exceptions are completed.
Exceptions like?
Law is not prohibited, whether law prohibits.
So those exceptions are for the different opinion when you are issuing an adverse or disclaimer or opinion on complete set, not onto the acceptability of the audit. There is no problem on the acceptability of the audit. As per SA 805, you can accept it. No problem in that. So A, there is no problem with the acceptability. Fine, because here the net profit before tax is required, separate engagement, perfectly fine. You just need to make sure that you issue separate opinion on both. Fine. No complex in that. Okay. Number two, the B question, the implication of the qualified opinion on the complete set versus on the net profit before tax. So how will you deal with that particular factor? how will you determine the implications of the qualified opinion?
Reference of this report.
Okay.
We will consider the nature of the matter, pervasiveness,
Yes, the factors that we discussed.
framework, time period, all those things.
Absolutely. Yes. So we discussed those factors. Those factors will be considered here. So we need to think of how the matter is pervasive, whether different set of framework is there, whether different time period is there, how much it is relevant to the single particular element versus the entire set, all these things. The factors we discussed. That is the answer over here. So if I talk about the answer again, you specify the provision. Okay, so SA 805 allows an auditor to engage to a specific element or item. Then this is the requirement with respect to that. You do the analysis and then get the conclusion. Yes, number one, you can accept it. Number two, with respect to the implications. Okay, so what you need to consider: nature, pervasiveness, effect, period, all those things that we discussed. And accordingly, you need to basically give that how it will be impacting your opinion. So this is how you need to write the answer for this particular question. Any doubt?
So will there be a situation where he cannot accept the audit?
There are scenarios where if accepting or issuing an opinion becomes misleading. So rare case scenario, but yes, possible.
Okay.
See, here the end use is for the key managerial personnel. Over there, you identify the end use is to mislead someone. At that point in time, it becomes a problem.
Right, sir.
Okay, so quickly we will take 5 small questions, kind of a rapid fire for the revision. Okay, very small basics, but it will help you a quick revision of the topic. Okay, so question number 1, and I need a specific fast answer from you guys. SA 800 special consideration audit of special purpose financial statement applies to financial reporting framework designed to meet the need of all users, general users, specific users, auditor only.
Specific users.
Specific users. Yes,
C.
correct.
C.
Second, when reporting on special purpose framework financial statement under SA 800, the auditor must include an emphasis of meta paragraph to highlight the auditor's responsibility, basis of accounting, audit fee, key audit matter.
Basis of accounting.
Very good. Basis of accounting. Yeah. Third, an engagement to audit only only the statement of cash flow for the financial year would be conducted under 700, 800, 805, 810.
C. 800.
Very good. 805. When auditing a single financial statement like balance sheet under 805, the auditor must obtain the understanding of only balance sheet item, the entire operations, interrelated items, company's marketing plan.
Only balance sheet items.
C. C, sir. C.
Yes, interrelated items, because only balance sheet will never let you, give the clear picture whether it is appropriate or not. You need to look into the interdependence. See, that's why I said in the start, when you are doing a specific element or a specific set of financial statements, single FS, it is never a single FS. You have to go more beyond that to understand that particular item. For example, to understand the depreciation, you need to check the fixed asset. To understand the sale, you might need to go to the trade receivables or inventory or something like that. Okay. Last one. If an auditor has expressed an adverse opinion on the complete set of financial statement SA 805 dash the auditor to issue unmodified opinion on the single
A. A.
permits, encourage, prohibits, requires.
A.
Okay. So SA 805 permits.
Sir, this is the same thing again, sir. Like the last question, sir. Last specific condition, no, sir. We have seen that he can.
So adverse opinion on the complete set and auditor dash to issue unmodified opinion on single FS.
So he can, sir. We had seen, no, so he can, provided.
Prohibits the
In general, the general rule is prohibits. SA 805 prohibits to issue two different opinions. 705 also.
Yeah, but sir, we will not say it permits also, because sir, there are exceptions, no? So we will never say that.
That's why always first go for the general rule. What general is? It is prohibited. You should not. But there is an exception for a rare case scenario. So usually, generally, what is there, you should go first for that unless and until you have been given that specific condition or specific information in the question. So it will be prohibits, not permits. Permit means in all the cases it permits. It is not the case. It is very specific set where it is permissible.
But still, sir, it is there, no, sir. It permits that way.
Yeah, but let's
Permits
say
is
if
not a
I
wrong. Sir, permits is not a wrong answer that way, sir.
no
If we
no
take
so if I add permit over here, what will become is permits in all the cases. It will become a general rule. That will be the wrong interpretation.
okay, sir.
Okay, so these were the 5 questions. For the quick revision. Any doubt till now?
No, sir.
So we discussed today SA 808, 805, okay, with the questions practice. In the next session, we will continue chapter 8 because one essay is pending. We will take up that essay 810 and then we will start with the chapter number 9. So what I want you guys to do is read the chapter, practice more and bring up your doubts for that particular topic. Okay?
yes, sir. Thank you.
Okay. Thank
Thank
you.
you, sir. Good night,
Thank
sir.
you, everyone. Thank you. Good night. I'll see you in the next section. Good night. Yes.